Stocks are hot as inflation cools. That's our top story today on the Wall Report. I'm your host, Greta Wall. The major indices are all rallying in today's session as new data shows inflation pressures slowed in April. The Bureau of Labor Statistics Personal Consumption Expenditures Price Index, or the PCE price index, rose 0.2% monthly and 6.3% year over year last month. That was a slowdown from March. The core PCE price index, which excludes food, energy, and trade services, and is the Fed's preferred inflation measure, rose 0.3% monthly and 4.9% annually. That was also a slowdown from March and came in line with economist expectations. The data supports the Fed's theory that inflation may have already peaked and is now trending downward. The report also showed an increase in incomes and consumer spending last month. Personal incomes rose 0.4% monthly, while consumer spending was up 0.9%. Adjusted for inflation, though, disposable incomes were actually flat, and consumer spending rose just 0.7%. And consumer sentiment did fall further at the end of May. The University of Michigan's Consumer Sentiment Index slipping to 58.4 from the flash reading of 59.1. Now, that's the lowest reading in more than a decade and was lower than economist expectations for sentiment to be unchanged from that flash reading. Sentiment about current economic conditions did slide more than 6 points to 63.3, while expectations for the next 6 months tumbled more than 7 points to 55.2. Consumers' inflation expectations for the next year, though, did ease slightly. Americans now see inflation remaining at 5.3% over the next 12 months, down from 5.4% in March. 5-year inflation expectations, though, were unchanged at 3%. And the market is also digesting some more retail earnings in today's session. Gap shares are down more than 6% today after missing Q1 expectations and slashing its full-year guidance. The clothing retailer reported a loss of 44 cents per share on $3.48 billion in revenue. That was a steeper loss than analysts had expected, and revenue was down 13% year over year. Same-store sales dropped 14% annually versus expectations for a 12.2% drop. The company blamed those struggles on Old Navy as the brand's sales tumbled 22% year over year. Gap did forecast fiscal 2022 adjusted earnings between 30 cents and 60 cents per share. That's down from previous guidance and sharply missed expectations for $1.34. The CFO said the revised outlook accounts for executional challenges at Old Navy, uncertain macroeconomic conditions, and inflationary pressures. Costco shares, meantime, are flat today after beating fiscal Q3 revenue expectations but missing growth estimates. The big box retailer reported earnings of $3.04 per share on $52.6 billion in revenue. That was in line with analysts' profit expectations and better than revenue estimates. But same-store sales growth fell short. Costco said sales at stores open for at least a year jumped 10.8% year over year versus expectations for 11.8% growth. And Big Lots shares are tumbling more than 13% in today's session after reporting a surprise loss in the first quarter. The retailer reporting a loss of 39 cents per share on $1.37 billion in revenue. That was sharply lower than analyst expectations for a profit of 91 cents per share on $1.46 billion in revenue. Big Lots said same-store sales did slow in April, prompting it to mark down prices. The CEO blamed that slowdown on inflation. The company's gross margin rate also shrunk to 16.7 or 36.7% last quarter from 40.2% a year ago. Big Lots does expect comparable sales to fall year over year in the second quarter and its gross margin rate to be in the low 30s as costs continue to rise. And Ulta shares are jumping today about 10% after beating Q1 expectations and raising its full-year outlook. The beauty retailer reporting earnings of $6.30 per share on $2.34 billion in revenue. That was better than analyst expectations on the top and bottom line. Comparable sales did jump 18% year over year, with double-digit increases across all major categories. Ulta also said it has opened 10 new stores so far this year. Company forecast full-year revenue between $9.35 billion and $9.55 billion, with comparable sales growth between 6 and 8%. That was up from its previous forecast. Ulta also now expects full-year earnings between $19.20 and $20.10 per share. Company still plans to open 50 new stores total in 2022. And Dell shares are also rallying today about 11% after crushing its own fiscal Q1 estimates. The laptop maker reporting non-GAAP earnings of $1.84 per share on $26.1 billion in revenue. That beat the company's own forecast for earnings between $1.25 and $1.50 and topped analyst revenue estimates as well. Sales in Dell's Infrastructure Solutions Group did jump 16% year over year versus Wall Street's expectations for 5% growth, and sales in the Client Solutions Group were up 17% compared to a year ago and also higher than estimates. Now, oil prices are mixed today amid continued supply concerns. West Texas Intermediate crude futures falling to just under $114 per barrel, while Brent crude futures are up slightly to over $117 per barrel. The European Union is still working to get Hungary on board with its proposed ban of Russian oil imports. The European Council president said he's confident a deal can be reached before the next meeting on May 30th. That's Monday. But both West Texas Intermediate and Brent crude are on track for weekly gains. And U.S. gas prices broke their 17-day record-breaking streak today. AAA showing the national average for a gallon of regular gas dipped back to just under $4.60 overnight, but the price for regular is still nearly 50 cents higher than just a month ago and up more than $1.55 from this same time last year. And peak driving season does begin this weekend as Americans are expected to travel for Memorial Day. That's on Monday, and the market will be closed. So that means no Coffee with Greta newsletter in the morning and no Wall Report at noon, but I will be back on Tuesday. Enjoy the long weekend and stay safe. Give this video a like before you